Hi, this is George. In this video, we are going to see about Nifty Straddle Adjustments. This video is a continuation to the last video that I have posted. So if you have not seen the last video, please see that for getting more clarity on this video. Let's jump into this. So this slide is almost the same as what I have given in the last video, except for the fact that I have given here as few adjustments, where in the last video I would have said no adjustments. It's not even few adjustments as in plural. It can be like few adjustment alone, like only one adjustment you would have done in few months to make profit. And disclaimer, this is just for education purpose, and please do your research before taking any trade. This is not a recommendation, but just my view. So adjustment rules. So once we entered all the trade, we are going to enter at 3 o'clock on expiry day of the previous month is what we have seen in the last video. And adjustments is like from the after we are entering the every day of the next day, like every time every day after you have taken the trade, we are going to see at 9:30 a.m. in the morning. And with that, like where the market is and where our portfolio is, our P&L is, with that we are going to make the adjustment. With that we are going to carry on. So we will do adjustments only when the break even is breached. I will tell with an example on this. So what adjustment is, we'll be booking the profit leg, and we will be like selling a OTM or ATM near to the sold leg that we have already sold. We will take a new position there. With an example I'll say so that it will be easy for you. For now you can read this. And the last point is like we'll always be taking a protected straddle in this, and we'll be booking profit if our P&L is showing plus 5k, and we'll book loss if it is showing minus 5k. Let's go to the thing. So what we saw is like last time I would have started with scenario 1, 2 and 3, but this time I'm jumping into scenario 2 because that is the winning strategy, winning scenario. I don't want to waste time in scenario 1 and 3. Anyway, I'll be posting the results on 1 and 3 in the later slides, but we'll quickly jump on to the scenario 2, where we are going to enter in the second or third week according to number of weeks in the previous month expiries, and we'll be exiting on the like 3 p.m. of the current month. I will say that again with this example. So we are going to see for the month of September. So September expiry it is. So September last Thursday I'm selecting, and we are entering in August second Thursday, which is 12th of August. And here again I have to give September 30. We are entering at 3 p.m. So let me see where the market is. 16,400. So let me sell 16,400 put and call, and for protection I'm buying 15,900 and 16,900, 500 points above and below. Now we'll be, this is the break even that I told you, like 16,0572, 16,743. Once this is breached, then only we are going to like do any adjustment, and we'll be starting to monitor on every day at 9:30. This is the MTM, and we'll just see how it goes on every day. You can see the MTM is moving as the days proceeds. This is the day where we are right now, and this small vertical line is saying that where the market is right now. So once this line either moves to the red zone in the upside or downside, then only we are going to do any adjustments. So till now it has not moved for this month. We'll just keep seeing. It has breached on 30th August. So it has gone to 16,823. So we are going to book profit on the profitable leg, which is 16,400 put. We are having a profit of 8,540. We are going to book that. It is currently trading at 89 rupees. I'll just put that as 90 rupees. And then we are going to sell one more call, which is 16,800 put, which is near to the market. 16,800 put. So by doing so, our payoff chart will start looking like this. We have extended the break even little bit. Now let's see what will happen the next day. Again it has breached. So again we are going to do the adjustment, wherein we are going to book profit on this 16,800 that we just did like last day. at 150, which is the current price, and we are going to sell 17,000 in this case because it has moved above 69.50. So I'm going to sell 17,000. So once you sell that, your payoff chart is going to look like this, whereas you are going to make profit if market goes up, and you will be in loss of maximum of 2,820 at expiry day if market didn't fall below 16,400, which is 560 points from now. So mostly we won't make a bigger loss of more than 3,000. Let's see what it happens. We can see like market is on the upside, so we don't have anything to worry about. We are almost reaching the expiry for the month of September, and we are in safer side. And 30th of September around 3 p.m. we are going to close this. It is 2,160 somewhere around. So I have put that as 2,200 as a round of figure. So we have made a profit, whereas last time before adjustment it was at a loss of minus 7,830. Now it is profit of 2,200. Similarly, we'll see for all the months so that you will get like familiar with this strategy on what I am saying. Now for the month of October, I have given third expiry of September and expiry day of October. And let's see where market was at 3 p.m. It was trading at 17,600. So let me sell 17,600 call and put. And buying 1,700 and 1,800. Now let's see how it goes. We'll start monitoring from 9:30 for the next day. Here is our break even. Market has not yet. No, it is almost, but not yet. Good that we didn't do any adjustment because market has reversed actually here. Again almost breaking. Yes, it's now almost like only 10 points, 952 and 17,943. So I think it's time for us to do our first adjustment. We are booking our profitable leg, which is at around 100 rupees, and we are going to sell 18,000 put. So now we see that our payoff graph is looking like this, which means like we are not going to end up in loss unless market reverses and goes down to 17,492. Though here we are not going to get any profit, but still it's not a loss. So if market doesn't go down, we don't lose anything. Let's see where market is headed. It's still an upside, so we have absolutely nothing to fear. So 28th is the expiry day. We can see like on by 9:30 it is like giving only less profit, but let's see what it happens at 3 o'clock. Actually in this month I have seen this previously that it is giving us the maximum profit, but this is kind of a luck because it was starting, it could have went up also, but luckily for us it has come and given us a profit of 5,300. But I have mentioned in the previous slide that if you are getting a profit of 5,000 we are booking. So I'm just saying that even though we are getting little more profit of 5,300, I'm saying that we are booking at 5,000 rupees. Now let's see the next month example. October 2nd week, November expiry day is November end, 3 p.m. is the entry time, 18,300 is ATM straddle, protection 500 points above and below 17,800 and 18,800. We'll start at 9:30 from the next day. You can see the MTM. we have not breached the break even. Okay, we are breaching in the downside now, so it's time for us to do adjustment. Our profitable leg is C in this case, which is trading around 129. We are booking at 129. We are opening 17,700 call option. Now our payoff is going to look like this. We'll be in profit unless and until market goes beyond 16,332. Let's see what that happens. Max profit in this range is, you can see, like it will give around 6,500, and MTM swing you can keep seeing. So here only at 6,000 we could have already booked profit. So I've already given us 5,000 per month of November, but let's see where it is going. Okay, it is ending at 6,000 profit, the maximum profit. Still I have given 5,000 because we are booking at 5,000. If you want, you can hold also, because if you think like a market is not going to go so much up, you can hold. It's totally up to you, but for a conservative side, I just don't want to show you the best case scenario and say that this will be always in profit. So as per the rules, I am saying that, okay, if it is 5,000 loss or profit, we are booking it. For the month of December, 3 p.m. we are entering. Market is, okay, in this case it's 851, which is little confusing whether to take 17,800 or 17,900. Let's see, 5 minutes before it was at 17,844, 10 minutes before, and 5 minutes before it was again 17,848. Then it has went. So I think you will better take 17,800 than 17,900. So I'm taking 17,800 of call and put, and buying 17,300 put and 18,300 call for protection. I'm going to start at 9:30 from the next day. Break even is not breached. Okay, it's breaking here in the downside again. So I'm going to book profit in 17,800 put call, sorry, at 167, and we are going to sell 17,300 call. Now our payoff graph will be looking like this, where maximum profit is 6,200 again. We are safe for now. In this, you can see like our MTM has never gone beyond minus 5,000 or something like that anytime. So this is actually good if we do this way, because we are not going to lose much. Here we are getting profit of 5,000. We could have booked here for the month of December. I already said we are booking, but I'll just show you how we are making, like how much we could have made. 6,200, 6,300, 7,200, 7,900, 6,300, finally 5,600. So I have given us 5,000. Now coming to the month of January. So we are entering at December 3rd Thursday and exiting on January expiry day. I'll put here January expiry day here. We'll be entering at 3 p.m. It is 17,200. So I'm going to sell 17,200 call and put. I'm going to buy 16,700 put and 17,700 call. Now let's see what it happens the next day. Actually, the break even has broken the very next day. Once we have entered, after like 2 days after we have entered. So it's pretty early, but still as per the rules we have to book profit and do the adjustments. So it's 180 to around 93, whatever it is. and we are going to sell 16,700 call. Payoff is going to look like this. You'll be protected till 17,311. We'll just see what it happens. Keep a look on MTM as well. Okay, so MTM has reached 5,000. So I'll say we'll better exit this position with 5,000 loss. Let's not carry it over 5,000. It will be a headache for us. Let's see if we are not have booked the loss. Let's see where it goes. You can see the market has breached our break even and it is already going in the downside, and we are having MTM of 9,000, 12,500, 13,000, 14,000, 17,000, 18,000, 18,500 was the last, but market again has reversed actually, and now we are in the profitable zone and we'll be ending in the profitable zone. But we are not going to take the headache of having a loss of see the loss of 18,000 without doing any adjustment. So I'm saying that I am booking a loss of 5,000. We'll see the last month of January, sorry, last month of February. So we are entering at 3 p.m. 18,200. Buying 17,700 and 18,700. We'll start monitoring at 9:30 from next day. It's getting breached here. We're booking profit at 180 of call, and we are going to sell 17,600 call option. Payoff graph is looking like this. We can book profit at 5,200, but max profit can be still 7,600. Anyway, we are going to book it here. I have given us 5,000, but let's see where it goes. Actually, February is the month where Ukraine-Russia war and all came, so market went down actually. So ideally, it's not going to breach this level and we'll be getting the maximum profit, but still we'll be booking at 5,000 as per the rules, or else we would have got 7,500, 8,800. Okay, so this is how it is. We are ending in profit. That's it. So scenario 2, you can see, like I'll show the summary here, before adjustment, after adjustment. After adjustment with protection, we can see like out of 6 weeks, it's 5 weeks we are getting profit, and overall profit was 17,200 and monthly profit is 2,867, which is a very good profit. And scenario 1, if you see, which was like entering on like 45 days before and exiting 15 days before, in those cases also you can see that, and you can see the numbers. I'll show the summary as well. We can see here also we are making profit, but not as good as what we saw in the scenario 2. So I prefer to do scenario 2 rather than scenario 1. And scenario 3 is entering on the last expiry last day and exiting in the current expiry last day. Here we could see like the summary, we will see like it's ending in profit even though we are doing adjustment. So out of the 3 strategy, we can see like scenario 2 is the best one. In the last video I was told you like scenario 3 was the one without adjustments, but anyway, it's in that case our MTM swing was more and we will not do any adjustment. We'll just like kind of look and pray to God that market should come down or come up, something like that. But this is something that we are going to do live trading. Like we will be knowing what to do when it goes to loss and when it goes to profit, when to book. So I prefer to do this way. And for your I also for getting conviction on the strategy, though I have showed you from September, this video is already a bit lengthy. I'll just post the data on what it has happened from January. From January till August also I have backtested. And I can see like for 8 months I've got a profit of 12,200, in which 3 months were loss actually, and 1, 2, 3, 4 months I have booked profit of 5,000. If you would have waited, it would have been more or less. I'm not going to comment on that. But this is what we saw like in this video, where in few months where we have booked 5,000 profit. Those months we had say like market have went 5,200, 6,000, 8,000, 8,000. Again, this month where we booked loss, the loss was again 18,000, but we have waited till then it would have again made a profit of 5,000. So let's not give more details on that. We'll just stick to the plan. Like out of the 6 months we got 17,200, and even of the last 8 months before that also we got 12,200. Though the profit is less, but still it is profitable. So, and we'll never go to naked straddle, because you can see like always it is going to end up in loss. Always let's be in protected straddle. I'm confirming it for the second time with the data. And our objective in stock market or option selling is making money. I'm not predicting where market will go. So it's not that okay, market is going to go up, so I'm going to do this. Market is going to go down, I'm going to do this. Let's have a neutral strategy so that wherever market goes, let's not be an astrologer to predict where the market goes. We'll just act on what market is doing. Okay, market is going up, so I'm going to do this. Okay, market is going down, I'm doing this. Let's not make this as a big deal. And firefighters who are like the experts in adjustments, they can also start with this like a scenario 2, and maybe they can do further adjustments to make more profit than this monthly 2,800 or 17,200, and can be profitable. So this can be used by experts as well as a starting way, and then they can build on this and can make wonders with this strategy. Next video we'll see in some other interesting strategy as well. Thank you.